Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and with me joining my colleague Nandita Khemka. Well, Nandita, once again, sideways trade, but better than yesterday, that's what I have to say. We did see that the Sensex closed with about very marginally higher 50 points and Nifty also above that 25,500 mark. Sensex definitely closing on the day of its weekly expiry and did see a choppy session in today's trading session. We did see some gains that came in after, that stayed till 9:45, but then again we fizzled out. We picked up the momentum from 2 o'clock, but again we can see that the momentum also fizzled out towards the end of this trading session also. If you look at some of the sectoral gainers and losers, Nifty PSU Bank top sectoral gainer for today, and it has extended the gaining streak to the 6th consecutive session right now. Other than that, we can see Bank Nifty index also doing quite well with about 0.2% gains. Nifty IT index, however, taking a back seat, and also Nifty metal index with about 0.3% gains that is coming in. Nifty auto index that came in with your auto sales data, we did see a 0.2% cut that came in. Bajaj Auto definitely one of the top losers on the Nifty 50, given the fact that the street was disappointed with its sales figures as well. But yes, coming to the broader end of the markets, that also fizzled out gains. Market breadth standing at 1:1 ratio. Both the mid-cap and small-cap indices snapping its 7-day gaining streak. But coming to the top gainers and losers on the Nifty 50, let's take a look on the way up on the Nifty 50. That includes the likes of Apollo Hospitals, Bharat Electronics, Reliance Industries. Apollo Hospitals with about 3.6% gains, definitely coming in after the company announced the demerger of its pharmacy and digital health business, and the company does plan to list within 21 months. So yes, the good sentimental reaction which is playing out in the stock. We'll discuss more about the stock later in the segment. Bharat Electronics also doing well with about 2.6% gains. The company did receive orders which was worth about 528 crore rupees since its last disclosure on June 20, and today the entire defense theme was also buzzing, so you can see Bharat Electronics also doing well. Reliance Industries, one of the top Nifty gainer with about 2% gains that came in. The stock also hit a 9-month high and also received the highest target price by Novama of 1801 rupees per share. Other than that, on the way down, we can see Nestle with about 2% cut, Axis Bank, Shriram Finance, Trent, all of them exhibiting weakness in today's trading session. However, mid-cap and small-cap indices, the star performers for the 7 consecutive days, today the rally seems to have fizzled out. Nandita, what are you making from that segment?
Well, Lovisha, first of all, I think quite a boring session, if I may say so, because the Nifty was moving in a 90-point range and looked like, we would be snapping a 7-day gaining streak. But, towards the end of the session, the mid-cap index just about managed to eke out some gains and end the day marginally in the green, marginally so. But the small cap index ended in the red. So, yes, the broader market has fizzled out, but the mid-cap index did stage a good recovery from the day's low to at least manage to end the day in the green. If you look at the advanced decline ratio, even Stevens, but it was skewed slightly in favor of Laggards. And I want to also point out the India VIX index cooled off today as well, 2.5%. Yesterday we saw some bit of spike in the India VIX index. It was up 3%, so there were concerns that perhaps volatility would increase, especially after we've clocked that 25,600 mark on the upside. But volatility cooled off. Yes, we have been range bound, after hitting that 25,600 since the time we hit the 25,600 mark. Perhaps we will be looking at some consolidation as we head to the July 9th deadline of US tariffs. So yes, I think that will be the next key trigger point for the market, whether or not there is a deal struck with the US. We'll get to know in the next 2-3 days, and that will be crucial to watch out for. And of course, we also have the earnings season that's knocking, right in front of us. So yes, that is something that, of course, that will decide which way we will head from here. But for now, it seems like we are consolidating. In terms of the mid-cap index, of course, marginally in the green, as I mentioned. But some of the movers I want to take stock of, MCX, that stock hit a fresh high, all-time high today. In excess of 9,000 rupees. So good session for that. Some mid-cap banks were also in focus. The likes of Karnataka Bank, of course, yesterday we heard the news of CEO exit. MK downgraded the stock today. following the CEO exit, and in fact it has pointed out that the transformation may stall here on for the bank. IDFC First Bank, among the top gainers on the Nifty 500 index, it has earned an upgrade from Investec. It has cited strong growth outlook for as a reason behind the upgrade, and that stock was up somewhere around 6% or thereabouts. RBL Bank was another one that was buzzing in trade. It has earned an upgrade from IFL Finance. Some of the other stocks to take stock of is Gabriel India. That stock was locked in upper circuit, 20% higher. In fact, hit a fresh high today. The company has announced restructuring and strategic restructuring that will consolidate business operations and drive future growth. So yes, the street liked it, and the stock was up somewhere around 20% or thereabouts. In terms of other movers, I want to point out it was Blue Dart that was topping the charts. Raymond also doing well. Asahi India, City Union Bank, HBL Engineering, Blue Star. These were some of the gainers on the Nifty 500 index. On the flip side, you had laggards in the form of Coromandel International, Kaplan Labs, Go Digit Insurers had a down day, 5% down on that stock. First Source Solutions, Home First, these were some of the other laggards. We had a few listings as well today. Two of them listed at a premium. One was extremely flat. So Globe Civil, that listed at a 27% premium. In fact, ended the day higher as well. Ellen Barry Industrial Gases, that also listed at a 23% premium, was trading, or in fact ended the day in the green. Kalpataru listed at very flat at issue price of 414 or so, but managed to end the day higher. And Raymond Realty, that stock debuted at a 4% discount on the NSE after its demerger from Raymond. So all in all, for the broader end of the markets, of course, they have lost some bit of vigor, some shine. But at the end of the day, what counts is the fact that the mid-cap index did manage to recover from the day's low to just about manage to end the day in the green, Lovisha.
All right, Nandita, let's now break down some of the stocks that did grab limelight today. Let's talk about Apollo Hospitals, one of the top gainers on the Nifty 50 and definitely the newsmaker of the day. We did see that the company announced to demerge its pharmacy, digital health and pharma distribution businesses into a newly listed entity called NewCo. Now, the transaction involves 3 steps. Basically, the first step is the demerger of the omni-channel pharmacy and digital health businesses, which is Apollo 24/7 and telehealth. Second, they plan to amalgamate Apollo Health Co., which contains Apollo 24/7 with the new company. And the third step is the merger of Keimed, which is one of the India's largest wholesale pharma distributor at this point of time, with NewCo. Now, Apollo Hospital shareholders, they plan to receive 195.2 shares of the new company for every 100 shares of Apollo Hospitals. And the new company is expected to list within 18 to 21 months. That's what the management has spelled out. Also, the Apollo Hospitals plans to retain about 15% stake in the components, and the components in the new company will be including your Apollo 24/7, Apollo Pharmacy, Keimed and Apollo Telehealth unit also. They plan the projected revenue for the new entity to be pegged around 16,300 crore rupees for FY26, and they're also targeting 25,000 crore rupees with 7% EBITDA margins. Now, why the company did rally today and saw a good up move was that it removes the holding company discount. And what the brokerages have been saying, they remain quite bullish after this deal was announced. Morgan Stanley shared an overweight rating on the counter and announced a price target of 8,058 rupees per share, and they said that if NewCo is able to manage its aggressive revenue targets that it has penciled out, it will generate good shareholder value going ahead. Even Citi shared a bullish projection on the counter, and they shared a buy call and price target of 8260 rupees per share. So Apollo Hospitals day's high of 7,500 rupees that we saw today, and it also recorded its all-time high today. And now that the brokerages are calling for it to cross 8,000 rupees soon, so that is a great thing that is coming in for the counter going ahead. Nandita, what do you see the next stock in the counter?
Sure. That's true. In fact, the demerger gives shareholders direct participation in the digital and pharmacy businesses as well. As you mentioned, eliminating the holding company discount. Of course, the structure will, support sharper focus on capital allocation, management focus, as well as value unlocking across its verticals. And as you mentioned, the stock did hit a fresh 52-week high today. The stock has been doing in the last 1 month. So yes, 8,000 not very far for the share of Apollo Hospital. But moving on to the paint sector from the hospital sector, brush of optimism here, a quote of optimism, so to say, finally, because after 4 years of being underweight, ICICI Securities has finally turned bullish on the paint sector. Of course, there were quite a few headwinds that the companies, the incumbents, so to say, were navigating, with new entrants posing, challenges. We did see paint companies see quite a bit of value erosion as well. But talking about the ICICI Security brokerage note, it has upgraded both Asian Paints and Berger Paints from reduce to add. Now, both the stocks weren't really high flyers in trade, but this report gains significance given the fact that this upgrade, so to say, has come after years of being downbeat on this particular sector. Now, ICICI Securities has pointed out a pickup in demand, more favorable valuations, as well as limited downside risk to margins going forward. So these are some of the factors that have led ICICI Securities to upgrade some of these paint names. Now, for Asian Paints, the target price has been up to 2,700 from 2,000 rupees. For Berger Paints, the target price has been raised to 650 rupees from the current 515 rupees. Now, the turnaround, in fact, according to ICICI Securities, in the sentiment has come as industry activity has picked up after a lull of 2 years. So 2 sluggish years where we saw, revenue erosion as well for some of these large cap paint makers. But now the sentiment is improving and it is expecting industry revenue growth to recover in FY26 vis-a-vis a decline that was seen in FY25. Now, new entrant Birla Opus, of course, has been causing a lot of troubles for the incumbents like Asian Paints and Berger Paints. But according to ICICI Securities, the company has exhausted 95% of its planned capex, indicating the fact that it has already, upfronted all its heavy spending. And of course, the battle for number 3 position is intensifying. Of course, we also had the AkzoNobel and JSW Paints deal that was announced. So the number 3 spot will be very interesting to watch, because these companies will be vying for that particular spot. Now, the absence of price-led growth and the use of higher trade offers and discounts to counter rising competitive pressures, impacted performance for some of these paint makers. But most of the issues, according to ICICI Sec, are now behind. And of course, crude prices we saw have cooled off to below that $70 per barrel mark after spiking to $80 per barrel mark as Middle East tensions have cooled. And of course, crude is a raw material or input for paint makers. So that means now that crude prices have cooled off, margin tailwind has emerged as well, because margins are as of now near the lower end of the guidance as well. Both Asian Paints and Berger Paints are currently trading below their long-term averages, which provides valuation comfort, and which is why ICICI Securities, I beg your pardon, believes that the risk reward at the current juncture looks favorable. So yes, brighter outlook for some of these paint makers after years of being underweight. So let's hope that better days are ahead, because all the competitive related issues, competition related issues, according to ICICI Sec, are behind for the sector. Lovisha.
Paint sector, something that we need to watch out, and definitely now that the monsoon season is here, July to September is going to be a little bit of lean period for the paint sector, and of course the volumes are something that we need to watch out for also going ahead, Nandita. Alright, coming from that to rate sensitive stocks, because that have been in focus, and today we also had an interesting report that came out from CLSA where they have recalled a high conviction outperform rating on DLF, and they believe that the stock has potential to rise 22%. They also believe that the stock has potential to cross 1,000 rupees mark. Now, what the analysts have pointing out is that the company is already set to surpass its pre-sales guidance for FY26 after the recent launch of Project DLF Privana North, and the brokerage has also raised DLF's FY26 to FY28 pre-sales estimates by about 20 to 30%. Now, what they're believing is that the company is better placed than its peers on 4 major parameters. The first is your higher operating cash flow generation. Second is the lower spend on the new land growth. Third is your strong and growing rental portfolio, and lastly, they believe that it has a superior net cash balance compared to what the peers it is. Now, if we look at the Q4 performance for DLF, that also did well. We saw both the bottom line and top line figures grew in double digits, and operational performance was also quite well. And if you look at the stock on the charts, spectacular rally from May onwards. Higher double-digit returns from May lows, and given that RBI's easing rate scenario, it definitely places well for the entire Realty pack and definitely comes across good for DLF as well.
That's true, Lovisha. In fact, DLF is making its Mumbai foray as well, right, with its luxury project launches. And I think in the next 2 weeks, you will see that launch also taking shape in partnership with Trident Realty. 3, 4, 5 spacious, BHKs will be priced at 5 to 7 crore rupees per unit. In fact, DLF also saw record sales bookings, back in FY25. And FY26 guidance stands at 20 to 22,000 crore rupees or thereabouts. So out of its full year guidance, DLF has already achieved, I think, almost half of what they guided for within just 3 months. In fact, it is planning to launch residential projects worth 17,000 crore rupees in FY26. But of course, its foray into Mumbai real estate market, that's something that the street will be watching out for. But, from real estate, let's focus in on some of these manufacturing plays, electronic manufacturing plays. To be more precise, we're talking about Dixon Tech. The stock was under pressure today. Not great news when it comes to the stock, and it has been reeling under pressure as well. Just a few days ago, we had Phillip Capital, reducing its target price and flagging concerns. And today we had Morgan Stanley coming out with a report where they've downgraded the stock to underweight, and the target price, although has been raised to 11,563 from 8,696 earlier. This target increase is, by the way, is over 30%. But still, the stock is down 25% from its peak of 19,150 or thereabouts, and this revised target price also implies over 20% downside from current levels. So now let's point out some reasons why Morgan Stanley is not very upbeat on this particular counter. Well, it of course sees higher competition in the core EMS business once the government's PLI scheme ends in 2026 or FY26, so to say. Earnings growth slowdown is expected from FY27 to FY30. Core EMS earnings are likely to slow down by 46% in FY25 to FY27, and thereafter 18% in FY27 to FY30. Now going forward, component manufacturing is moving in the right direction according to Morgan Stanley, but it will require tech tie-ups and approvals and costs as well. And when it comes to display fab business, it's deeply cyclical, and it requires a lot of investment and R&D expenses as well. But the key risk that has been flagged is diversifying and collaborating with its clients. The clients, in fact, diversifying and collaborating with its rivals. Recently, Phillip Capital also flagged off the same issue, wherein they said that one of its key clients, which is Motorola, is or has started outsourcing to its rival Carbon. And that's how this supply chain diversification is something that could emerge as a big risk for Dixon Tech. Now, in 2023, I think Motorola was a smaller player, and it was the entire manufacturing was handled by Dixon. But as Motorola scaled up, it started collaborating with Dixon's rivals, and in fact, Longcheer, which is also like a second big client for Dixon, has started outsourcing a small portion of its volumes to Carbon. So yes, these are some of the key risks wherein it is losing out market share to its clients. Now the target price was cut to below 10,000 rupees by Phillip Capital as well. And of course, there has been other triggers as well for the stock. Recently, the promoter sold almost 3% stake in the counter via block deal as well. So yes, the road ahead looks a little rough for Dixon Tech as earnings risk emerge and clients are diversifying their supply chain as well. And the stock, as I mentioned, has corrected quite a bit from its peak of 19,150 or thereabouts, Lovisha.
That's right. That's right. That was Dixon Tech for you. But for that, that's all the stocks we have for today. Tomorrow we have HDB Financial Services listing. The grey markets are hinting at a flat debut, but we'll watch out for this and for this development for tomorrow also. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Nandita and me, and thank you for watching.